So hello, good evening, everyone. Hope you can able to see my screen. Can anyone please confirm?
Yeah, I can see that.
Okay, great. So in today's session, we are going to cover topic number 3, which is chart patterns. So so far we have learned the candlestick patterns, support and resistance, simple moving average, exponential moving averages, and the Fibonacci retracement. In today's discussion, today's session, we are going to cover various chart patterns and how it is used in predicting uh, the future movement of the stock that we are going to learn in today's discussion. Okay, so initially when we started, it is like we are looking at the each and every candles, and then based on the candle formation, we also looked at how those candles the set of candles can make a pattern of bullish or bearish. So today's one, it is not only a couple of candles, but a combination of many candles. It could be maybe 50 to 100 candles or sometime more than that. Based on the candle, together they are forming some shape. And based on that larger shape, we are going to learn about how to predict the future movement. So what's happened that in any stock, when we look at the chart, the prices are not constant. As we learned earlier, the prices keeps on moving based on the market psychology or the people psychology. And due to that psychology, the movement happens either in some direction, and those directions are either up, down, or sideways. And these movement happens because of the people psychology or sentiments, or we can say the expectation of investor or the trader. It could be individual or any organization, any big company, which is called sometimes HNI or INI, individual high net worth individuals, or any particular organization or banking system. So those are the different kind of investors and traders in the stock market. So we need not to worry about, based on the individual or mass psychology, whatever will be what is the going to be market trend or the price movement, it is going to be reflected on the chart. And any trend, I think we keep on discussing, any trend cannot stay the same forever. It will be some changes. Either if there is an uptrend, it is going to be after some time maybe a sideways or downtrend, or if it is a sideways, it will change in the other two trend. And if it is a downtrend, again it is going to change in the other type. So overall, either up, down, or sideways, these three combination will keep on changing depending on the market psychology. And these technical charts, which reflect the changing behavior, forms some pattern, and those patterns we are going to learn today. So chart patterns are mainly categorized into two categories. The broader categories are reversal, or we can say trend reversal. So that means that a price is going up, and after a certain point of time, it is started going down. That is the one kind of reversal. Another kind could be if the market is, or the price of any particular stock is going down, and after a certain point of time, it is going to go up. So that is these two combination are the reversal of the trend. I mean, up is moving to downwards and down is moving to upwards. And the continuation pattern is the one more type of pattern. That means whatever the pattern of the chart movement is, after a certain point of time or certain break or intermediate rest, it will continue to the same direction. So this is some brief theory. We are going to learn in very detail, and with the help of example, it will be more clear. Okay, so chart pattern as we were discussing in the introduction slide. So when these chart pattern, we are going to learn certain kind of chart structure, and whenever those patterns appears on the chart, then it could be a potential sign of reversal of the existing trend. That means if the chart is bullish, and when these reversal chart patterns will appear on the screen or on the chart, it is going to be bearish. And if it is a bearish, after a appearance of those chart patterns, it is going to be bullish. And the continuation, that means after a certain point of time, whatever was the previous trend, same trend will continue to move further. And what will be the use of these chart? What we are going to learn is that it helps in identifying the potential reversal or the continuation, and also it is going to help us to identify what will be the price target. Price target means that an individual has took an entry on a certain price point, and then it is going to suggest that at what point of time the individual investor or trader should consider exiting from the trade. Or again, under what is the reward? Like if somebody has entered maybe price point of 100, so what could be the potential reward? 1:1, 1:2, 1:3, or maybe something else. Okay, not this one. Yeah. So the first one we are going to learn is the bearish reversal chart pattern. So on the screen, it will be something like similar what is depicted on the screen this point of time. So any particular stock, when we are going to observe something, this kind of situation, like okay, the price is going up, and after a certain point of time, it will reverse. So how to identify that one? That is the bearish chart pattern, the first type of chart pattern that we are going to learn. And the first chart pattern is the bearish trend reversal, is called head and shoulder, or in short HNS pattern. Head and shoulder, very famous and well known. And whenever it appears on the chart, it is known as a bearish trend reversal. So bearish trend reversal means, I mean, you don't need to by heart the name, but just to remember, logic is that after a reversal, it is going to be bearish. That is how the bearish trend reversal comes. Okay. So after a reversal, it is going to be bearish. That means before a reversal, the market was bullish. And the structure of that bearish trend reversal or the head and shoulder will be something like this. So like, okay, why it is need is that, okay, there may be possibility that we don't have a history of that particular stock, and based on that we may not able to identify or draw the potential resistances. So during those situations or those stocks, it is this is one of the way to identify that, okay, at what point of time our trend is going to be reversed. So in that chart, head and shoulder, there will be on top, okay, on top, which is considered as a head, and both the side, it will be like a shoulder. So it's like you can consider any individual person where your head is there on the peak of the chart, and there is a two left and right, again lower peaks, which is which is equivalent to the shoulder. So this is the chart pattern. We are going to maybe take one more example, and I will show you in the real chart also. So this is the example of Ashok Leyland, and maybe I think we can directly look into the chart. But before that, so if you look at, I have just highlighted a peak of the chart, which is head, and left and right, that is the two smaller peaks. Okay, both the side. It may not be always equal at the same level. It may be possible that it will have a little difference in height of these low shoulders. Okay, and when we combine the lowest of the so both the shoulders, that is called as a neckline. So in this example, this green color line, which where my mouse pointer is there, this is called as neckline. And if we combine this both the lines together, maybe it is going as of now infinite both the ways, but that particular line is called a neckline. Okay, and a horizontal or not horizontal, a vertical drop from the topmost level till this neckline, which is called a depth of the head and shoulder pattern. So, and normally that used to be a first target. If the price movement is happening from the topmost point, and if you see the head and shoulder pattern, so that is till from the head to the neckline, it is the first target. And if there will be a further break of the price beyond the neckline, then most likely it is going to cover the another uh, depth, or you can say the price drop equivalent to the previous head to the neckline. The D I have depicted here on the chart. So that is the first target will be this much. That means the first, if the head and shoulder formation is happening, so the price is going to go down till this point of time, and from there there are two possibilities. Either the price again can go up, but if it breaks successfully here, then it is very much likely that okay, the price will come down to the one more price point, which will be equivalent to the same D. Okay, so and the best uh, place or best time to enter into the market is when this price point is breaking the neckline. Okay, so here if you look at this example, it has broken this one. It is a potential sell signal. And this Ashok Leyland's example, it has completely uh, achieved both the target, first D and the second D. So if somebody maybe missed here trading before this price point, they can consider entering here after a confirmed breaking down of this price point. So if you look at here, it did a false breakdown, and again price moved up, and once more again it broke. So let me show you the real chart, Ashok Leyland chart. It will be more clear. So this is my investing.com, and I'll show the chart for you. So yeah, so this is the example I was just showing you in the PPT, and this is the real live chart example. I mean, market is closed, but I'm into the investing.com. So if you look at this middle of this, I have selected in the weekly time frame to have a better clarity. So if you look at this particular chart, how to identify head and shoulder pattern. So as I mentioned in the chart, you first need to identify head and shoulder means a kind of formation okay, formation is similar to a person, okay, which has a middle top, that is the peak of this chart, and both the side of the chart there will be a two more peaks, which is your individual shoulder. That is how it is named as a head and shoulder. So I will just highlight it for you so that it will be clear. um, so this is that peak. Okay, maybe before that, if you have any confusion, what I'll do, I will just look at the complete history of the chart so that you know what I'm talking about. Okay, so in the entire history of Ashok Leyland, there has been a two peaks. One peak is somewhere in 2018 or so, and the other peak maybe recently up, okay, gone. So within that uh, peak, we just need to identify. I mean, why it is important to know the various kind of chart formation is that, I mean, if it will be there in our mind, so depending on the chart we are looking at, it will strike that, okay, yes, this particular chart formation is happening, and based on, you can be well prepared to take a trade or do the investment, or even if you are done already the investment, you can consider exiting from those investment. So that is the primary reason we are learning about this various kind of potential signal through which we can identify the movement of the chart or movement of the prices for the future. Okay. So here I have just highlighted, maybe I'll take a dark blue color or I'll blue color. So if you look at whatever I have highlighted, it is the um, consider as a shoulder. And then if I take another copy of that, and if you look at the placement of this particular curve, if I'm making, this will be the left shoulder of this head and shoulder pattern, and this area will be the right shoulder. Okay. So anybody if having any doubt or any clarification, because most of you, I believe, is looking at, I mean, finding or seeing this kind of formation or chart first time. So there is possibility. So anybody has any question? Okay. So in the whenever we are taking the trades or deciding our investment, we are not going to draw these lines, and this is not needed. So whatever that the demarcation or the lines that we are making on this chart, it is for the learning purpose only. In the real time scenario, you may not need to learn. You may not need to draw these one. This is for the understanding purpose only. Okay, the good question now this, how to decide the neckline. I'm coming to that point. So as of now, we have decided the head, left shoulder, and right shoulder. Okay. To decide the neckline, we need to decide the head. We got the topmost point and two shoulder, left one, a right one, two more point, which is the next highest point. To decide the neckline, we need to see within the below the shoulder what is the lowest point. Okay, so 2 point we need to get one point below the shoulder area, what is the lowest. So in this example, I'm just trying to highlight that just for a clear. So this candle, this is the lowest one. Okay, this is the lowest point, and maybe in this side it could be, we can consider this one or this one. Okay, so as I said, that technical analysis is not a science, it is more of the art. So a slight, I mean, there's sometime it is happening the false breakdown or breakout. That means that the candle, the wicks of the candles is taking some extra moves. So at a times those extra moves we need to avoid. Otherwise, in this example, neckline will be, I'll draw a line which will connect these 2 points. So I'm just putting a line, okay, which is joining the lowest point of these two neckline. So I'm putting the lowest level of this one. So it is touching on this line. Maybe this is a crossing, but that is okay. So this line which I have drawn just now, it is considered as a neckline. Okay. So once you decide a neckline, then if you put a perpendicular line from the top, that means from the head position till this neckline, that is called a D. That is the depth of this particular head and shoulder pattern. Okay, so most probably, or in the practical scenario, it may not be possible to identify head and shoulder unless and until it is formed. So you may not able to trade confidently when the head and shoulder formation is happening. However, once it is formed on the chart, you should be able to take the trade to the next level. That means, so as I said that, okay, from the top of this, from the top of this chart, till neckline. That is the another target in terms of price point. But the next target would be the another one more D. So one more D, how to draw it? So I can take, I'll just select the same and do a copy and paste, and I will get another arrow of the similar length, and I will pick it up and place it. Starting point is at the neckline, and the bottom part will be wherever it will be. So the similar, if I put another support line, so that is going to be my next target. Okay, and the ideal entry point, as I was mentioning earlier. So when it is going to break the neckline, that is the ideal entry point, and we need to wait for the confirmation. Okay, we will learn how to use them in detail, but confirmation means if you look at that very closely where the price, this particular neckline is getting broke. So if you look at the first candle, okay, so here it is the false breakout, and again it went up, and one more time with this red candle, it again did a breakdown, but price again went up, and there is one more time. If you look at the price is again price went up, but the candle in the both the scenario, the candle is still closing below the neckline. That means it is not able to break out this neckline fully. And then the third candle is completely the bearish candle. It is forming here, and the price is starting falling down from this point of time. So confirmation of the breakdown of the price point is happening, maybe the third or fourth candle. At the same time, if you look at this tiny green candle, okay, and we have already learned the characteristics of the candle. Can anybody suggest which kind of candle is this? The highlighted one, or the marked one, the green, the tiny candle. Yes, inverted hammer. An inverted hammer we learn is the one of the potential bearish candle sign. So, I mean, on the way of learning more and more chart patterns or indicators, we also need to consider the previous learning, that is the individual candles. And whenever we apply more and more indicators or chart patterns or candle types, it is going to give us more conviction or more better edge to decide on trade more confidently. So here it is a bearish candle, which is the inverted hammer, and that is giving another confidence that okay, there is a high chances that price will go down. Just to make it maybe a more better clarity, we can also look at the volume part, right? How are the volume during this at particular candle? So if you look at the volume also during, this time, so the big bearish candle, the volume was, higher than the average one, and subsequent one, it is not a good volume. Okay, not very great volume, but the candlestick pattern is giving a good signal. So volume and a few more things are not 100% necessary to have the very high volume. But as I said, that those are the additional indicator which provides a more confidence when taking the trade. Okay, so we will learn more when we learn about the application. But I think the most largely we cover this point, and I will just repeat myself once again. So in a head and shoulder pattern, there will be the topmost point of the chart, which will make a head of the head and shoulder pattern. In the left hand side, there will be two more lows, or I can say high lows, which are making the left and right shoulders. And to make the neckline, we need to identify one lows within the each shoulder, and if we draw a line connecting these two lows, that will make the neck of the head and shoulder pattern. Okay, so there is one indicator also which is used for this one. I'll just delete it for better understanding purpose. Okay, so you go to the one, or this is 1, 2, 3, 4, 5, 6. So under six tool bar option, if you click here, you will find many indicators, and we are going to select here head and shoulder. Okay, this formation, the name is already there, head and shoulder. So if you select this one, and now we are going to learn how to put this particular indicator or particular chart tool on the chart. Okay, so to use this chart, we need to click first some at the wherever the formation of the left shoulder is getting formed. I mean the starting point of the left shoulder. So if this is the left shoulder, the starting point will be something like somewhere this one. Okay. On the neckline. So I'm clicking first click on the neckline, and the second click I will do at the top of the shoulder. So whatever the top point at the shoulder, I will just do the second click there. And the third click I'm going to do at the neckline, where this particular this candle is touching this neckline. Okay, so based on this lower point, we have formed this particular the neckline. So that is where we are going to click the third one. Fourth one, it is going to be on top of the head. So highest point of head and shoulder pattern, that is going to be the fourth click. Fifth click, where the first point of the right shoulder. So this is okay. So the fourth click, not sorry, fourth. This is the fifth click. I will do it here, and again I need to cover the right shoulder also, the top of the right shoulder, wherever it will be. I will click one more time, and finally the rightmost portion of the right shoulder. Okay, so here look that, okay, once if we have put this particular chart in the correct format, all three parts should be highlighted, but here maybe some connection issues, so it is not highlighted. I'll just pick it and pull it down. Okay, so once this particular tool is placed successfully, you will see some default green color like this, and all these part will be automatically highlighted. If it is not highlighting, that means while keeping this particular indicator, we have done some mistake, and we can do once again. Okay, so I'm just, for your knowledge perspective, I'm doing it once again. I'm going to this particular toolbar option, selecting head and shoulder, and I'm starting from the leftmost portion of this left shoulder, and maybe clicking on the neckline, or maybe little bit below the neckline where the formation is happening. Okay, to make it simple, where is the formation of the shoulder is starting. Okay, so I'll start maybe from here, click on this, okay, top part of this particular left shoulder, and then bottom part where the neckline is started, that will be the third point. Fourth point going to be the top of the head, and then fifth point at the bottom of the head, or from where the right shoulder first point is starting. And then I will click on the top of the right shoulder, and finally where the rightmost portion of the shoulder. Okay, so that is how the head and shoulder, and once we successfully keep it on the chart, it will again display automatically left shoulder, head, and right shoulder. Okay, and from the top to the neckline, that will be the depth, that is your first target, and after that this second target equivalent to the same drop of the price point. Okay, if you see in this particular example, this head and shoulder has covered or given you both the targets. Okay, so price, if you look at from price point perspective, the price dropped from 168 to somewhere around 34. Okay, so I can say around 5%, 5%, sorry, 5 times depreciation, 500 times. Okay, 5 times depreciation of the price of this particular stock has happened. Okay. Is there any question related to head and shoulder? Feel free to ask. If anybody has any confusion, any question. Okay. So these charts are not very frequent formation, but whenever it happens on the chart, it's kind of a some astronomical incident happen in the sky. It will be something like a similar way. So it doesn't happens, uh, always, but it happens in all the time frame. So if no matter that, okay, I have now from the learning purpose, I have shown you here in the weekly time format, but it can happen in any time format also, daily, maybe 4 hourly, hourly, or 15 minute. It is very much possible. Second disclaimer about this one, this neckline may not be always horizontal. Okay. It may be sometimes tilted also. So maybe I'll show you some other example where this neckline is kind of tilted. Is there another? Okay, maybe recent example of Tech Mahindra I can show you. So look at this one. This is again weekly chart I have selected, but it's a recent example. So this formation has happened when? I mean, somewhere in 2000. It started in 2021 and completed in 2022. So around last 1 to 2 year of example, this head and shoulder formation is happening. Okay. And in this particular example, so can anybody tell me what is the head, left leg, left shoulder, right shoulder? So head, identifying the head is very simple. It will be whatever the point that is the top of the pattern, that will going to be the head of the head and shoulder pattern. And we need to identify 2 shoulders. So left hand side, whatever the any lowest point, sorry, not lowest point, any higher low point. So any point which is lower than this one, but should be higher side. Okay, it's like our shoulder. So it is the next level of the head, below the head, but still it's the kind of upper side of the body, right? So the head and shoulder pattern is similar to this one, or body structure, where the head is there and 2 shoulders are there. So in this example, this is the topmost point which is making the head, and this is the 2 lowest point, left and right, that is making the shoulder. Okay, so now we have identified 3 points, and next 2 points we need to identify the neckline. To identify the neckline, as I mentioned, you need to find out 2 lower point below this both the shoulders. So this is the left hand. So this particular green candle, or maybe kind of a hammer, this is the lowest point, and right hand side, this bearish candle, you can say maybe the hammer or so. So that could be the another low point. And if you combine these both the lines, that will make a neckline. So I'll combine maybe something like this. It should be combined, or we can keep it horizontal. So whenever it is needed to draw a slanting line, so any line which is kind of a tilting towards right hand side, in the stock market perspective, it is not that much effective. So any slope which is left hand side is up and right hand side is down, so that is effective, but not that much. The most ideal situation of this neckline is any chart pattern where the neckline is something like this. Okay, so suppose suppose this candle, the wick of this particular red middle candle is not there, or suppose that this middle candle is not there. So considering that whatever the neckline we will draw, it will be something like this one. So that is making the left portion of this neckline is at lower side and right portion is the higher side. So this kind of tilted or slanting neckline is the most powerful in this situation. And um, and I can tell you the reason also why. Okay. So please see very carefully. So suppose any neckline something like this, okay, which is kind of a bending or slanting towards right hand side. That means the left side is at higher side and right side is a lower side. Okay. So the case number one, that okay, if somebody is going to take a trade, let's say entry point. Okay, so where as per the theory we learn, the entry point is going to be somewhere here, where it is breaking the neckline. Okay, and let us say, just see what is the, at this moment, what is the price point. This point, let's highlight in different color. So price point is 1281. Okay, so this is the case number one, or I can say entry point number one, just for understanding purpose. In the second scenario, suppose this particular middle candle is not there. So in that case, our neckline will be something like this, where the left hand side is down and right hand side is up. So in this case, what is happening? Your entry point is becoming at this level, which is maybe the entry point 2. And if you mark the price point at this level, the price point will be around 1333. Okay, which is around approximately more than 50 rupees higher. So why this kind of neckline is more effective? That it is giving you a better entry position. Okay, so in the first scenario, your entry point is down. That means you are selling your stock, or maybe you are starting, or you are maybe selling the futures of this particular stock at 1281. So that means you are selling at the lower price. However, in the second example, entry point 2, it is the price point is 1333. So you are selling at more than 50 rupees of higher. So that is, and that means you are going to make a more profit. Okay. So you are selling it high, maybe in this example first, and then buying it later on. So that means you are getting 50 rupees of additional profit. So that's the reason any neckline which is tilted, or you can simple example, which is left hand side is lower than the right hand side, that is the most powerful. Okay. So once you maybe start practicing few more times, it will be very clear. Otherwise, it is a very simple way I thought of explaining that, because of in the second scenario, your entry point is at a higher point. That means you are going to sell at the higher price point, and then you will be maybe something exiting somewhere here. So that's the reason it is more effective. Okay. So completing this particular example. So if that is the neckline is something like here, okay, let us say maybe the false breakout. So at least neckline that, if not slanting or if not left hand side is lower, at least you try to be mark a horizontal neckline. Okay. So horizontal neckline is the, and the second level, I can say second level of the ideal situation. So in this case, neither you are entering at the very, ideal position nor the lower position, but I can say you are making an entry at the right position. Okay. So it's neither less or more. So this will be your entry point. And if you look at the price point, what is the price at this point? This point. So it is 13.6. So 1333 was earlier, that 1281 was the earlier. So it is kind of in between, approximately the middle point. Okay. So this is the ideal entry point. And once we define the not entry point here, okay, first we need to define the depth of, or maybe the what could be the potential targets if somebody entering into this kind of trade based on this particular setup. So I'm just putting a one depth from the top of this trend till the neckline and taking a clone, and then sorry, clone. Okay. And then the second target could be from the neckline to the bottom. Okay, so that is going to be second target. And once we have the price point, we can simply draw a horizontal line. Okay. So as per the today's learning, okay, of Tech Mahindra, so the price has not yet touched the second D. Okay. So I mean, if anyone is following Tech Mahindra, you can keep an eye that whatever we are learning today, it may get applied. So if it is happens, that means it is going to touch this line. Okay. And this one again, I'm not claiming here, but I'm just trying to uh, help you to understand that okay, if somebody is taking a trade in Tech Mahindra or maybe wants to, so keep an eye that okay, it might touch this price point also when maybe nobody knows. It has there is, I mean, sometime it take a much longer time than expected. But this is based on today's learning, this is the possibility. And along with this possibility, we can add further conviction, some more indicators in the subsequent session that we are going to learn. So any points or any other question from anyone on this head and shoulder, the two examples that we discussed? Okay, great. So I assume there is no question. If there will be any further question, you can post their question to the group and I try responding that. So we covered head and shoulder, few examples. The next example is called a double top. Okay. So it's a very simple. Double top means, okay. So when it will happen? So double top will always happen at the top of the any chart. Okay. If it is not at the top of the chart, that means it will not be treated as a double top. Why? What I'm saying, maybe I'll just show you in by example that will be more clear. Okay. So let's say in this example, same Tech Mahindra, and suppose the price point is something somewhere like this. So if we look at the history of the complete this Mahindra, okay. So this point is also a double top, considering this particular price. Okay. But if you look at the previous history of Mahindra, it is not the ultimate top. There has been a previous price point which was higher than this price also. Okay. So I mean that is the ideal situation. If double top is really on the top of the trend, that will be a most favorable situation for taking a trade or doing the investment based on, or no, not investment, basically exiting or from investment. So either if you are at the top, either if you have some particular share of that particular company, you can able to sell it, or the second option could be you can do the short selling. Short selling, again, you can do the intraday of the stock, or you can do the futures. So futures we are going to learn as part of level 3. But this point of time, understand that a double top is the another one way to identify the trend reversal. So in this is the Wipro example. We will see, I will show you in the chart. So what is happening that okay, there is a this particular price point, it is the all-time high. So it went up but from there it is the price was unable to sustain, and then it came down, and one more time it tried going up, again could not succeed, and third time also it didn't succeed, and finally the price point coming down and down. So that is the first time all-time high, and then trend reversal happened. Okay, but after some point of time, it took a support at this price point. So I think it's reached up to 750 or so, and came back to 613, and here it find and the support, and again it went up. Okay, so when it again went up, and now this particular chart has the history of this top. Okay, last time it was, and it is so it was not able to break this particular resistance. So the price went down. Again, it tried going up, and this time also it didn't able to break that resistance. And from there, price fall, keep on falling, and even it broke the previous support as well. And if you look at from there, it just keep on falling and falling. Okay, it again tried going up. So this particular resistance, so this particular, yeah, this particular support here, which has become a resistance now. So it came down here and again went up. So not only we are learning the new concept, at the same time, we should also understand to keep on practicing whatever we have learned previously. So if you look at this pink or no, purple color trend line, so at this point of time, sorry, let me, I think, go to the chart, directly to the chart. That will be better for better understanding. So I was talking about Wipro. Meanwhile, if anybody have any question, feel free to ask. Okay, so this is the chart of the Wipro Limited. Okay, so we are discussing this one or any other chart? No, this one only. Let me see. Yes, 2022. So why it is showing 2023? On daily. Okay, let's start the weekly one. Yes, I believe this is the chart which I have shown in the example, the daily chart. Okay, for the better clarity. Why I'm not able to get the exact same chart. So starting on the 2020. Yes, correct. So this is the chart where we have all-time high at this price point. So I'm just making one line so that it can select or touch both the highs. So before that, try touching here, came down, again tried touching and breaking here, again came down, and again went third time, and from there it could not able to sustain or take the price high. No, this is the US listing of the Wipro. I was looking at the Indian one. Sorry for that. It will be chart will be similar. Yes, if you look at the chart are similar, not much of change. From the study purpose, we could have used both the chart. That is fine. Okay. So the top, considering the top, I will put one resistance line. Okay. And in the double top, between the double top, price might have definitely came down. So whenever price took a support, okay, that will be the support line for this particular example. So this is the green candle and the wick. I will consider here wick 2 for analysis purpose. And then from the two top that we have joined with the resistance line, okay, from there, if you drop a perpendicular line on the support line here, it will give you, this is called again the depth or the D. And once we know this particular price point, it is very much likely that so to to fall this particular stock one equivalent to the same D. So I just cloned it, copy and paste it, and then applied it here one more time D. And whatever will be the price here, I will just put one more trend line as a support. Okay. So suppose we are here and we have just learned the double top, we don't know the future. So because we have the future data, we are just, this is called a back testing. We are applying our theories, whatever we understood on the real chart, which has the historical data, that it has worked or not. Okay. So D equivalent to D, we got another D, and then um, this is going to be our first target. So suppose if anybody is entering, what is the right point to enter? In this example, this particular price point change is the ideal situation to take an entry into the market. Okay, and wait for your target to get achieved. So I mean, we learn whenever we are going to apply these learnings. But normally what happened, I'll just mention one more point, that because some of you are already doing some kind of trading. So either exit point should be, okay, wait, how to exit from the market. So the first, I mean, either you are exiting based on your targets, that you have defined the target on the chart, and then stick that, okay, if my target is going to achieve, then I'm going to exit. You can have a multiple target, maybe half of the quantity you can exit in the first one target and remaining on the second target, and so on and so forth. Or the second option could be exiting from the market is stop loss. So whatever has touch the market first, based on that you should be doing the exiting. Can we enter at 726? Yes, absolutely, we can enter at the 726, but to get that knowledge we need to wait till level 4. Level 4, that ultimate edge that we are going to learn, that is that module name is ATA, Advanced Technical Analysis. There we are going to learn how to take entry at the topmost point. Okay. So yeah, so that is the equivalent of flying the jet or fighter plane. Right now we are trying to learn how to drive a motorcycle. Okay, great. So, so as of now, this is the ideal entry point based on this chart pattern. And once the target, wait for the target to achieve, when target achieves, one can exit. So if somebody, for example, Wipro is and again, it's not long time, 2022. So somebody could have, maybe started it here, not here, sorry, this price point around 605. So this is how much time it took. So this is the first 24th of January, and this is May. So approximately 4 months and let's say 15 more days, 4.5 months. So in a 4.5 months, 600 to 482. So approximately 100, 120 or so, right? So that much point we are going, but this is again the short selling example. So that means to trade this one, either, so whatever we are learning here, it is going to be a base for all the modules. So either we can learn about future and options. We are going to do the same analysis on in the level 4. It will be the additional of this. On top of this same analysis, we are going to add few more advanced technical analysis that will give you the ultimate edge to identify potential tops and bottoms. So when I'm saying potential tops and bottom, means how you can enter on the top, and then how you can exit at the bottom. That means you are squeezing the maximum juice out of the particular stock. Okay. So this is the second example. And this second example is again the bearish reversal. That means after reversal of the pattern, the chart is going to be bearish, or the movement of the price is going to be bearish. So as part of the bearish trend reversal, we have learned two things: head and shoulder, and then double top. And here in this example, if you look at, as I mentioned, this is called this is example of the false break out. Okay, what does it mean? So I will just highlight one point. If you look at this point, okay, the highlighted one. So in this area, what is happening is the candles are, or the wicks are breaking the top, the resistance at the topmost, but it could not able to break. It tried one more time, but again, it didn't succeed and finally came down. So whenever such situation is happening, that price is trying to do something, but it could not able to do that. So depending on where it is happening, we can call it a false plus some prefix, sorry, some suffix. So in this example, because it is a resistance, if the price, if price have gone out, okay, above this point, so that means the breakout could have been happened. But because it was breakout happened, but it could not succeed, that is the reason it is called, this kind of scenario is called as a false breakout. And even similar thing is also happening here. And the price went down, came down, and again it is coming down, and again it tried to went up, and here it fought a lot. Okay. So many couple of days the price is stayed here at this point of time. Okay, I think I can see at least 12 to 15 candles, up to 15 till 15 days of duration. That price point was struggling into this one, and finally it went down. Okay, so two chart pattern that we have learned, that is the head and shoulder and double top. Okay, and today we have also consumed the time for the day, and these are the beautiful setups. I can work very well. At the same time, we need to have few more conviction. When we are going to learn in application the real market. At the same time, I have given you these two real examples. So this example is recently happened. Okay. Yeah. Is there any question based on the learning we had so far? The two bearish chart pattern. So we started with the candle, and now we are looking at the chart. How based on the just looking at the chart, we don't need to go to the individual, candles. By looking at the broader charts, you should be able to take the trade. Okay, is there any question from anyone?